right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin in the crypto markets. Guys, it is Thursday, hump day in Jofuel's world, and we are dumping. We are dumping hard. And guys, I have some very big macro price action to show you here. But welcome in, everybody. Yeshwanth, much love to you. Welcome in. Jofuel, what is up, brother? Thank you for being here. And of course, like the stream, guys. If you get any sort of information or insight into the market from this live stream today, please like the stream for me. Dad87, welcome in. How to catch the falling knife without getting wrecked. Well, honestly, the best way to do that is to wait for a little bit of a range to form. Wait for the knife to stop falling a little bit. And I'll cover that. We're going to cover this. And your next question down below, can we expect lower? I do think lower is coming, but we might see a little bounce from this liquidity grab. And I'm going to explain that in just a second. Glasshopper77, good afternoon to you as well. Time Attack, welcome in, man. Thank you so much for being here. Thank you for modding for me. And yes, guys, please hit the like button. ZMX, welcome in, man. LFG, let's go, baby. All right, Samuel S44, welcome in as well. Yeah, things are getting hot, man. Things are getting hot. Mind Tapestry, welcome in. And Samuel, thank you for modding for me as well. Appreciate all of you guys so much. So guys, first off, yesterday in the video, I covered how the total market cap for the last 2.5 months has fallen from the upper band of the Pitchfork to the bottom of the Pitchfork, where the bottom of the Pitchfork had been really holding as support for 2.5 months, but the way we were moving up in this ascending channel looked bearish. And this entire range, I had marked out a key internal high. If we zoom in on lower time frames, you'll see why this internal high was important. But we were looking to come up to grab the liquidity from this high and then possibly see a reversal, at least down to the bottom of the Pitchfork. But if the Pitchfork was lost, then we could see some massive bearish price action come in. Overall, though, we're looking at our big 5-wave impulse down, a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5 to make new lows below the lows. In this case, that would be equal to Bitcoin's 80.5K lows, but it's the total market cap lows that we made in November. So anyways, guys, this was important. What we were seeing this last week on the total crypto market cap was so important because for 2.5 months, do you guys hear me? Sound okay? Check, check. I just saw that someone said no sound. Let me know if there is sound in the chat. Please let me know. And I guess I will check on my end here. It was important. What we were seeing. Yeah, it looks like as far as the stream goes, if I play it on my phone, we do have sound. I'm going to wait for you guys to reply. Sound is clear. Okay, thank you, ZMX. All right, guys. So this last week was so important because for the first time in 2.5 months, we were starting to see weakness of our Pitchfork support being lost. And now I'm going to zoom in on the lower time frames. Thank you guys all for letting me know on the sound check. Thank you, thank you, thank you. All right, so zooming in on the lower time frames. For the past week, we've been going sideways. We've been going sideways in this flat correction. But you can see, especially if we zoom out onto like the 4-hour or higher, we really started to lose this Pitchfork as support. And we tried to get back in it a couple times, tried to get back in it. We couldn't get back in it, so we made a new local low. We took out the lows. Once you see the bearish backtest, you expect new local lows. But if you watched yesterday's video, I said, guys, after making the immediate bearish backtest, we made new lows. Now we're coming up for the higher time frame bearish backtest on the daily time frame. If we do reject here, I expect us to make new lows below the low. And if we actually, I'm going to go ahead and go to yesterday's video. I'm going to play yesterday's video for you because I talk about this just for a couple minutes in yesterday's video. If we do go to the total market cap chart, let me know if you guys can hear about this on the total market cap chart during the live streams and the videos over this week. But we're finally coming up to bearishly backtest that Pitchfork, that the Pitchfork that we lost that was holding for months as support at the bottom of the Pitchfork. If I zoom out on to the daily time frame. Welcome in, everybody. Thank you for being here. Yes, we'll cover some of the altcoins. Danger signs because for the first time in 2 months, this was holding for the first time in 2 months, really last week, we had started closing the weekly candle and multiple daily candles below the Pitchfork. And so we had the immediate low time frame back test. We rejected, so we made new lows, which we expected. If you have immediate low time frame backtest, you expect to take out your local lows if you reject. But now we're coming up for kind of a higher time frame backtest here. And if we do reject here, I do expect this to come down and probably sweep all the liquidity that is kind of built within this 2.5 month ascending. So you guys see how I warned about this yesterday as we were rejecting from this area on the daily time frame. So I'm going to zoom back out to the daily time frame as we were rejecting on the total market cap. And I was really worried because it was our first time that we were closing daily and weekly candles below the Pitchfork, especially the weekly candle. It was our first weekly candle close below the Pitchfork support level. And it was really our first daily candle close. We had one fake out in here, but immediately reclaimed the next day. But we had spent multiple days below the Pitchfork. And anytime you see that, it is showing a sign of weakness. Now, when you come up for that second higher time frame backtest, if you reject there, like I said in the video yesterday, you expect to make new local lows below the lows. And we are. But the scary part is, guys, is now that if we close another weekly candle below this Pitchfork line, it is pretty much confirming to me that we are losing our bullish structure of the Pitchfork, which has been our trend. I'm going to just zoom out to the 3-day time frame. It has been our trend for not only all of 2025, but for most of 2024, or at least for half of 2024. And this really could be the top of the bull market, just like on Bitcoin when we lost our Fibonacci channel and started closing weekly channels below the Fibonacci channel. It was a big dump to the downside. So we are dumping here, and I want to talk about a couple things. Let's see. Time Attack, thank you so much for the super chat, man. Getting close to buy it link spot area. Yes, I will be buying some link if we hit $9.93. I already have limit orders waiting there, and I am comfortable holding that underwater for 2 years if I need to. We will cover link for sure. But let me go ahead and run to Bitcoin real quick now. So on Bitcoin, we are losing the value area low of our 2.5 month long range. We are losing the value area low of our macro range. And what we were seeing in the past couple of days, I want to zoom in real quick and we'll go through what we saw the past couple of days. But today, if we close a daily candle below the value area low, it is going to be the first time in months that we have closed a daily candle below the value area low of our macro range. Because you can see the last few times we came down here, no daily candle closes below. It was just wicks below. So today is going to be important if we close that daily candle, and specifically a weekly candle below $85,000 or like pretty much $85,000. It is not going to look good for Bitcoin. This, in confluence with the total market cap losing the Pitchfork and starting to bearishly backtest from the Pitchfork, is a sign that we could see some major dumpage in the crypto market. Let's zoom in real quick on Bitcoin, go through the lower time frames. So over the past week or so, 2 weeks, 3 weeks, we have been looking at that rejection from 98K. And the reason this rejection was so important, because on the daily time frame, we did hold the value area low for multiple tests. So we were expecting a move up to the POC to test the POC. It was also the anchored VWAP from the all-time high. It was also our anchored VWAP. And in a bearish trend, you will reject from that anchored VWAP if it is going to remain bearish. So the second we started rejecting from here at 98K, I was expecting, honestly, to come down to take out our 80K lows. And I've been strong on that. My bias has been strong on that for weeks in the live streams, and you guys can go back and look at those. Now, we were looking at the 5-wave impulse, 1, 2, 3, 4, 5, and within our fifth wave to the downside, we were looking at the rejection from 98K. And we've been analyzing this move down for the past week, the move down from 98K to 87.5K. And I'm going to zoom in onto the 2-hour chart. And there is a count that we said that was a possibility where it did finish at $87,500 with us having that wave 1, wave 2, wave 3, wave 4, wave 5. Now, the last week has been kind of confusing because we've been chopping sideways, and we've been chopping sideways in these kind of 3-wave corrective moves. We had kind of an overall 3-wave corrective move here. We had that 3-wave corrective move here, and then we had a double zigzag in here, but pretty much it's a overall 3-wave. So 3-wave correction, 3-wave, but double zigzag correction in there. So overall, we could have been looking at this flat correction here as a complex sideways WXY correction, where now that was our wave 2 of our bigger 5-wave impulse to the downside. And now we are starting the third leg down, which is the most of the time is the most aggressive, most volume filled and explosive wave to the downside. I have been warning about this coming in really ever since I was actually warning about it even at this 90.5K, seeing this and then seeing a whole big thing start. But now it's becoming pretty clear, because if we turn on our volume, and you can see the massive spikes in volume that we are seeing on this dump to the downside today, meaning if this was the end of a major move, if we were looking at this somehow being a possibility of a 1, 2, all of this was a 3, and then we were looking at a 4, or even, I mean, actually 1, 2, all of this was a 3. This was a flat and a 4, a running flat, which I did say, describe as a possibility earlier this week, and then we dump in a 5. You don't want your fifth wave to be a spike in volume larger than the volume from your third wave. So we are seeing that. We are seeing a spike that is bigger in volume than this entire move down so far. We are seeing that increase in volume, meaning that this is probably the start of a new impulse, that this was a sideways correction, and this is the start of a new impulse. This could get really bad, guys, but we will probably see bounces. Like Dad87 asked, we are grabbing some key liquidity below us into our macro 786 Fibonacci. I mean, I guess we're starting to lose the 786 Fibonacci now. But with that increase in volume, we have to look at this as impulsive price action to the downside. Also, if we go into our order flow, you can see on the order flow, the dump that we are seeing today is a fresh positions coming in. Open interest is highly increasing and steadily increasing. Our CVD is steadily decreasing to the downside. So it means new short positions are coming in, successfully pushing the price lower. This is a healthy move to the downside, a healthy and strong move to the downside, which is, if you're a bear, really bad. Excuse me, if you're a bull, really bad. So what we're looking at here is within this third wave. Now I'm going to go to the Binance chart because I have this labeled out a little bit better on the Binance chart, but within the third wave. So we have, I'm going to zoom out to the daily real quick, and I want to show you guys the primary count that I've been following that Machi HK talked about last week on the stream as well. Actually, it was on Tuesday's stream, but we've been looking at this 5-wave impulse from the all-time high, a wave 1, a wave 2, a wave 3, a wave 4, and we now need a wave 5. The target is to take out your 74K lows because we're looking at that bigger ABC correction in here. After finishing the weekly impulse, we broke market structure bearishly. We came up to the flat zone of a flat correction between the 1.236 and the 1.382, and now we're dumping, and we want to see this C wave to the downside and an impulse to the downside. So we are seeing so far what looks like impulsive price action to the downside. But are we, so, and now we're focused on, we've already finished the first wave, we've already finished the second, we've already finished the third. It looks like now, with very high probability, the fourth wave is done. So now we're concentrating on that last fifth wave to the downside. So now this is when we can zoom in and look at the Elliott wave structure within the fifth wave. And this is what I just described a little bit earlier in the stream on the Coinbase chart. But the move down to 87,500 was our wave 1. We had our sideways correction in a wave 2, and we are just starting the third wave, guys. Now, within this third wave, this is where Elliott waves fractals within fractals gets kind of confusing, but within this third wave. So remember, we're in the third wave of a larger fifth wave. But within the third wave, you also want to see a 5-wave impulse to the downside. Now, in wave 1, you see impulsive move, 5 waves or a series of a multiple 1-2 or a double 1-2. Corrective move is a 3-wave corrective move. You're going to see another 5-wave move for the third wave, another corrective 3-wave move, and another 5-wave for the fifth wave. So 1, 3, and 5 are always motive wave structures, are always impulsive wave structures to the downside. So now we can zoom in on the rejection from 91K or $90,600. And we can look at this. This just started happening really a couple days ago. And if we zoom in onto the hourly chart, or let's just even go on to the 30-minute chart, on the 30-minute chart, we can see what looks like a potential 1-2, 1-2, and now we're dumping in the third wave. So then we'll need, because we have 212s, we're going to need 245. So very locally for the day, we might make 2 more local lows. Now they could just be barely local lows. It could be almost sideways and flat here. But soon, this first leg of the third wave, this gets confusing. I understand this. We're looking for a bigger 5-wave impulse in here. So this double 1-2 could be the first wave. We could be looking for a wave 2 retracement in the next coming days or over the weekend before seeing a 3, before seeing a 4, before seeing a 5 within your bigger third wave. Okay, so I understand this gets a little bit confusing here to try to keep track of this if you're not familiar with Elliott waves. But just know the overall bias is for downside with bounces along the way. We will see relief rallies along the way. Just like I was saying, we got a long from $86,300. We were expecting a relief bounce. We did. We got a $4,000, $5,000 relief bounce. And we played long off of that bounce. I told you guys yesterday, and I mentioned it in the video, I longed $86,302. My first take profit was at $89,500. And then yesterday, once we started losing $89,500 again, I took more profit on that long position. And I just got stopped out on the rest. It's okay. It wasn't a full trade. It wasn't a fully successful trade, but it was still profitable trade. So now, with the total market cap confirming a rejection of the Pitchfork, with us knowing that the higher Elliott wave count to the downside is impulsive structure and impulsive moves to the downside, we really are looking overall to come down and potentially come down even to 70K. And I know that sounds so far away right now, guys, but the larger time frames, not only on the daily time frame with our primary count, wave 1, wave 2, wave 3, wave 4, wave 5, to come all the way down potentially, at least to take out your 74K lows. But now we're looking at the smaller fifth wave, the structure within the smaller fifth wave. And it's highly, highly likely at this point that we are going to take out 80.5K. I'm not saying it's going to happen today. I'm not saying it's going to happen next week. It could take a couple weeks to happen, but the higher probability is that we are going to take it out. Another confirmation that this was going to happen, and this is where these indicators come, NAMI and Market Cipher B, come so good into play for me. They help me maximize my profits and get into good trades. As we were coming up to that key anchored VWAP and that key point of control, we had bearish divs on the chart. On NAMI, which is quicker, we had the bear divs confirmed, and we had money flow bear divs locally between the two highs in here. Because we are in a larger downtrend, making a lower high with bearish divergences on the chart, we should have expected impulsive price action to the downside here. And that is what we're starting to get. So unfortunately, guys, this is bad for the bears, bad for the bulls. Excuse me, I keep messing that up. Bad for the bulls short term. Now, once we take out 80K, I think we could see a pretty big bounce from 80K from a liquidity grab. And I think if we take out 74K or even at 78K, 78 to 77K, we do have some support down there. So we'll talk about that. But let me go ahead and pop in the chat and see what you guys are saying here. My GHK, welcome in, man. I've tried to pull the wave 3 target from either 87.2 and 86.2. Okay. So I see what you're saying. From either this low or this low, you're looking at the wave 3 target. And he's looking at just this last fifth wave here, guys. So just within this fifth wave, he's trying to analyze this third wave that we're seeing right here, that we're in progress of right now, this potential third wave, I should say. So if we zoom in here onto the 2-hour chart, and generally within the third wave, to get that target for the third wave, is you're going to take a Fibonacci extinction, trend-based Fibonacci extinction. Someone in my comments was saying I was saying extinction. I'm not, it's extinction, and that's what I was saying. But if we go from the highs at 98K or 90, pretty much 98K, first I'm going to bring it down to the 87.5K lows, and then we're going to bring it up to that lower high at that we created the other day. 75K is going to be our target. Now, I have this based off of log scale, because we are on the log chart here, and this is a high volatility move. So 75K to 72K is going to be kind of our targets for a wave 3, but primarily right around 75K. And guess what? That happens to be at the bottom of our Pitchfork band. That works out very, very nicely. The bottom of our Pitchfork band, which we would expect to see a major bounce from that because it's a major support that has not been hit yet. And so if we get that big third wave, now remember, within this third wave, we expect a 5-wave move within itself. Then we could see that bigger bounce in a 3-wave corrective move before dropping again. But let's pull it from the $86,200 lows, like Mach HK was just talking about, and 73.5K. So it's relatively, it would be, the third wave would be a swing failure pattern of your 74K lows. Is that possible? Yes. Now, we do have some major support, though, before that, and I do think, okay, let me zoom out onto the daily time frame again, and I just want to collect my thoughts here because I wanted to show you guys we are coming into, right now, we are coming into some major support. So if we go on to the big Pitchfork, this is our big multi-cycle Pitchfork. It's actually from the last bull cycle, so pulled from the lows, the summertime lows of 2021, those June lows, up to the 69K highs, down to the bear market lows of 2022. Look at how well this Pitchfork, especially the top of this Pitchfork, has been respected. So in early 2025, perfect rejection from the top. We dropped to the bottom of the band, of the upper band. We had a strong bounce. Came up, we saw that distribution range at the top of the Pitchfork again, came down to 80.5K where we bounced from the bottom of the band again. We came up in a 3-wave corrective WXY to backtest some key levels, rejected, and now we're coming down to hit that Pitchfork band again. So this could give us a small bounce here, guys, at least on like the daily time frame. You can see not only are we grabbing the liquidity of some key lows that were front ran earlier in this range, these lows were front ran with this low earlier in the range. So we are grabbing liquidity into our Pitchfork band of support. We might see a small move up here, but it's a small move in a wave 2 retrace before continuing the overall 1, 2, 3, 4, 5, coming down. So support locally, yes, possibly. Even on the lower time frames, though, guys, I talked about how we probably need a couple more 4-5s, like on the 10 to 15 minute time frame. We probably need a couple new local lows. But the rejection that we saw, not only from 90.6K, that was an important rejection as well, because remember, our CME gap was there. It was a little bit lower. It was about $1,000 lower. But if we zoom in, let me zoom in to the 1 hour time frame, and we look at that range that we've been seeing for the past 8 or 9 days. This range here, we had our CME gap, our naked weekly point of control in this area. We wicked above it one more time to hit the value area high of the range. We saw the local liquidity grab yesterday, internal liquidity grab, and we're dumping. So on the lower time frames, 1, 2, 1, 2, we're in the third wave. We now need a couple 4-5s in here. So even on today, over the next day or two, I expect some new local lows. But after that, I'm going to be expecting a move up to the golden pocket area where this short here could be a mega short. If you're not short, first of all, we did short 98K. Those of you that were with me, I shorted right here. I also shorted the back test of 90.5K right here because it was between our 382 and our 0.5 Fibonacci. And we're now looking to compound again that short if we come up here. But this is going to be about a week away, maybe. In the meantime, we can counter trend trade and scalp long, just like we scalped long $87,500, just like we scalped longed $86,300. Now, yes, I got stopped out after a TP1 on the $87,500 long position. I got stopped out after 2 TPs on the $86,300 long position. But overall, we still made money on this move up. We still made money on this move up, and we've been making money on this entire move down. And we will continue to. And we will continue, at least I will. I shouldn't say we, I should say I will continue to add and compound my short positions until the larger Elliott wave structure is getting close to an end. Okay, so we are at that major support level of the Pitchfork band that has held not only in April, but it held earlier in November, and it could hold for a small bounce now. But just like with the Pitchfork on the total market cap, You got some bounces. You got some bounces. I eventually think we're going to lose that upper band and start to drop on this chart here. You know, small bounce, lose it, back test it, drop. It is the highest likelihood for me, highest probability for me right now to see that happen. So it's just going to depend on the bounces. We have to monitor the bounces. We want to see three-wave corrective moves. We want to see volume decreasing on the bounces to the upside. But overall, it doesn't look good, guys. This entire channel here was an ascending channel that I said if we start to lose it, and by the way, I do want to show you some more low time frame stuff. I posted about this in the Telegram earlier today. Let me get back to the Coinbase chart. So first off, we have our bigger channel that we lost it last week. We bearishly backtested it. I'm going to actually zoom in on this. Let me get rid of this small range. So last week, we discussed this during the live streams. We had lost the channel. We had backtested, and then came down to 86,300. Now we pretty much were seeing the higher time frame backtest of that channel. We rejected, so we expect new lows. But what is important is this key ascending channel structure that was corrective has now been lost, has now been backtested, and has now rejected. So that means that at the high likelihood that this wave 4 corrective move is done. And now we're in the fifth wave impulse down. Now, zooming in even more, we were looking yesterday for the past couple of days. I'm going to zoom in and we're going to look at this little channel that we've been seeing. This little guy in here that I drew on the chart. And if you guys watch yesterday's video, this channel is on the chart yesterday. We'll turn on that little channel and then we will zoom in onto the 1 hour chart. And we were looking at this corrective move from $86,300 in this ascending channel. We rejected from the top of the channel, which was also at the value area high of our 8-9 day long range. It was the value area high of this range here. We rejected and we lost the channel. Now, earlier today in the Telegram, I posted to you guys, and I even talked about this in yesterday's video. If we lose the channel and we bearishly backtest here and we reject, I expect a dump. And we did, and we started dumping. Because we bearishly backtested the channel that we've been in for 2 or 3 days. How long was that? Let's see. Let's just kind of measure that out. It was about 3 days, 3.5 days or so, about 3 days. We lost it. We were bearishly backtesting that channel. It's pretty much a fractal of what happened on the higher time frame channel last week. And now we are dumping with an increase in volume to the downside. It is not good that we are seeing that. We are losing this corrective channel. It can go away now. Goodbye. It's done with. But overall, I am expecting more downside. And, you know, this is where we could get into the weeds. We can get into scalping. But within this rejection from Wednesday, yesterday, we are in some impulsive price action. I want to see a couple new lows coming in, and we can zoom in here. Let's zoom in onto the 5-minute chart, and let's look at. So it does look like we got our big third wave done. If you look at here, we got some 1-2s, 1-2s. And then this is kind of your third wave in here. We've already got 1-4. We've already got 1-5. So this push up right now might push us up locally to a golden pocket before we see another 5. But that would be the end of the first wave. The bigger first wave to the downside of the bigger dump. And that's actually a good thing. So if you're looking to long locally, scalp, if you guys are counter trend trading this knife catch right now, please be very responsible with your risk management, and please don't get greedy and take profit where profit is due, you know, at lower highs. So for me, it does look impulsive. The 1-2, 1-2, big third wave here, 4-5. Let's pull our golden pocket real quick on this here, and then we'll go to our golden pocket. So if we come up to around $84,700, $84,600, we could see the rejection from this area, where then we drop back down just to make one more new low and end 2 1-2s. You have your big third wave. You get your 2 4-5s in here. That could end, and we could then see a small bounce. And after making one more new local low for the day, we could see a bounce. Then we'll pull our Fibonacci from the highs of the wave 1 impulse to the lows of the wave 1 impulse. We could see a bounce in the next week that brings us up to $87,700, which is interestingly where our point of control is. Actually, let's zoom. It's going to be, yeah, around that point of control. No, it's going to be around our point of control of our 2-month long range, though. So let me hide this macro range, and we'll turn on that 2-month long range, 3-month long range. This guy. So you can see that golden pocket is going to be right around that point of control. But, you know, the fact that, I mean, pretty perfect bounce at $86,300 from the value area low. We couldn't maintain and get to the value area high, and now we've lost it as well. So it depends on how we close, because we could make one more new local low for the day, but come up and still close within the value area of this 2-month long range, this 2-3-month long range. We still have a few hours left, but it really needs to hurry up. I don't think, honestly, I think we're going to close the daily candle below the value area low of this 2-month long range at about $86,000, $85,970, let's say. But around $86,000, if we close today's daily candle below $86,000, we're going to be really confirming some more bearishness on the charts. It just doesn't look good, though, guys. And if we go back to this bigger Pitchfork support, you can see it's holding right now. We wicked past it. We grabbed the liquidity. But even I would like to see another low, and then the daily candle at least close above this. I want to see the daily candle close above this. And if we do, once again, we would be looking at this entire move from 90.6 all the way to the low as a wave 1, but it would be done. It was a double 1-2 impulse that finished. And now we would be looking for a corrective move, a 3-wave corrective move up to the golden pocket area, which would be right around that $87,000 area, $87,500. So if we do get up to $87,500, that could be a prime short position that could break us down, where ultimately you could hold on to that until you break the 80.5K lows, or you could even hold on to that until we break the 74K lows, even 70K. I know these targets sound ridiculous right now, what I'm talking about, but on the higher time frames, our highest probability is impulsive structure to the downside. Impulsive structure, guys. Wave 1, wave 2, wave 3, wave 4, and we are in impulsive structure. So if we do come up to here, that might be the last time we come up to here before we ultimately kind of zigzag down there. Now, our wave 5 targets. If we pull a Fibonacci retracement from the lows of wave 3 to the highs of wave 4, so pretty much from our $80,500 low to our $98,000 high, and we turn on our wave 5 targets, which is between the 1.236 and the 1.618. You can see both levels are kind of key levels of support, but specifically that 1.618 Fibonacci extinction. That is where our overall 5th wave could end. That is where we could see the ending of a major daily push down. Our primary count down 5. And let me do, that would be our primary count. I'll turn on the waves for you guys. So it would be something like that. That is a pretty aggressive 5th wave, but at the end of these dumps, we do often see aggressive 5th waves. It could end at taking out the 74K lows and an SFP of the 74K lows. But over the next weeks to months, we're looking kind of for us to come down to take out our range lows. Another, and not, now let's think in terms, not of Elliot waves, but let's think in terms of market auction theory or volume profiles, right? Volume is really important in the market. So let's pull our 2020, our entire price action for 2025, that volume profile. We have rejected the value area high of the range. Let's just pull that to here. We have rejected the value area high of the range after losing it. And if you start to close below the value area low of your range and confirm bearish price action below, what is the next step? Really, the only support levels below that are major liquidity levels. Because remember, volume and liquidity are the 2 most important things in the market. So that suggests, because we're closing daily candles below the value area high of the range, suggests that we at least come take out the 80.5K lows, but it could suggest that we take out the overall range lows. And remember, we're looking at this as the range. So the range lows are $74,000, $74,500. Now, I want to go on to the Coinbase chart because the Coinbase value area low is a bit different. I'm going to turn off our 2.5 month long range, and we're going to turn on that macro range. You can see the value area low is a lot lower at $85,200, let's say. But if we start closing daily candles and a weekly candle below the value area low, it is a sign that we're losing the fair value for this asset over the past year, and that we're going to come for major liquidity. We're going to come for major liquidity. So not even knowing the Elliot wave count is bearish overall, but in terms of market auction theory, we are bearish if we start closing daily candles below $85,200 and weekly candles below $85,200. Everything suggests another, let's think in terms of the volume, just volume in general. An anchored VWAP is a very, very strong volume resistance in a trend. In a trending market, you will often come up to the anchored VWAP and reject. If you do, you expect new lows. In a bearish structure, you will come up and test that anchored VWAP. If you keep testing it and rejecting, you keep expecting new lows. And the fact that we came up so perfectly to our anchored VWAP from the all-time high, which was the volume resistance of this entire dump, it's kind of our trend resistance of this entire dump, and we rejected and we impulsed down, suggests that, yeah, we're probably going to sweep the liquidity. It just does not look good, guys. And I don't mean to be so bearish. I am still looking for longs locally. I am in short still. My longs have all been stopped out. I am looking for longs, but the total market cap doing what it did yesterday, rejecting from the Pitchfork for the first time and rejecting and closing after closing weekly candles below. This is a very bearish sign for me. And guys, this Pitchfork guided us through in the entire year of 2025 with precision. I was selling my altcoins up here in December. And you guys can go back on my channel and watch the videos. I got so much shit from people because they said, we're about to see the biggest altcoin pump ever. I can't believe you're selling. I can't believe you're selling. And I said, no, I think we're at least going to drop to the midline. Sure enough, we did drop to the midline, but we ended up dropping almost to the bottom of the Pitchfork. After rallying and starting to reject up here, and if you go back and watch the videos around there, I was really concerned about that distribution range up here where we could see a drop at, and I was only really expecting a drop to the lower band, but we're now losing our Pitchfork, which is very dangerous. And by the way, guys, I have talked about this extensively. I talked about it with the collab video I did with Jason Casper. But if we zoom out and look at our macro Fibonacci channel, now what is this saying in the market that everyone knows? The trend is your friend until the end. So in a bull market, the trend is your friend. And you can, especially if you can determine what that trend is early in the market, you are set up for success looking at major support and resistances. Well, early in the market, I was able to determine based off the bottom base channel down here that we had a very strong trend to the upside, and we also had very key levels to short. I shorted the 2024 all-time high, bring it down to here based off of it hitting a major Fibonacci. But a couple months ago, for the first time in the entire bull market, we had lost our Fibonacci trend support. We had lost it. Very, very bearish. Now, any of you guys that have been around for a couple months have heard me talk about this extensively, but I talked about how on the bearish backtest, if we do reject, I would eventually expect new lows below 80.5K. We came up 3 times and rejected on the bearish backtest, but we created a higher low. So when we created that higher low and started pumping, I said, it's just continuing this corrective move. This corrective move could come up to the POC now, and it did. So the fact that we have lost our 3-year-long trend support, bearishly backtested it and rejected, bearishly backtested volume resistance and rejected, it does suggest lower prices. And if you're looking at whether you're looking in terms of Elliott waves, whether you're looking at this as a 1, 2, 3, 4, 5, or you're looking at this as a 3-wave corrective move in a W, 3-wave corrective move in an X, and now we need a 3-wave corrective move in a Y. Either way, we're looking at a sharp WXY correction where the target is to at least take out your 80.5K lows. So whatever scenario you have on the chart that's the most probable, all of them are bearish, macro time frame. Pretty much all of them. I mean, there are certain scenarios, very low probability scenarios, that we bottom out before taking out 80.5K and continue up to new all-time highs, but very, very low probability. All right, I'm sorry, guys. I've been chatting on a little bit too much. Let me jump in the chat here and talk to you guys. Welcome in, everybody. Thank you so much for being here. Hearing the sound all the way from Australia. Awesome. Well, Tony Box, welcome in, man. Thank you for being here. Crypto Wanderer, welcome in as well. I'm a little late. Okay, cool. John Shanks, good morning to you, man. Quiles 1100, good to see you in here, man. Diamond Whale, awesome to see you as well. Oh, I need to get back to you, Diamond Whale. I've tried to pull another wave 3 target. Okay, yep, we talked about that. It is either 71.2 or 73K. So much HK on that wave 3 target you're pulling. I'm not sure if you're using the log scale on that. I do personally because I'm on the log chart. But either way, yeah, it's pretty low targets, right? I'm buying Tau at 170 or under. Okay, we can look at some of the altcoins in just a second, guys. I'm pretty much done with the Bitcoin analysis. I want to go through the order flow really quickly, and I want to go through the liquidation heat map on the year-long time frame, pretty much looking at this entire year-long range. But pretty much we're done with that, so we can start jumping into some of the altcoins. Yeah, open interest went up pretty massive on this drop. And time attack, that is important to know, because if open interest is massively and steadily increasing on the drop, that means that it's a fresh, healthy drop to the downside. It is new short positions coming in that are successfully pushing the price lower. It is not a long squeeze, which can get a reversal. It is a fresh, healthy dump. Okay. Preparing for war. Good afternoon, man. It's always good to see you as well. At 70K, I'll be buying every day. Yes, if we do start getting down and even breaking the 74K lows, I will start dollar cost averaging into Bitcoin on spot. I'm saying new lows coming, guys. Yes. Yeah, Tiki Taku, all that to say new lows are coming, right? 70K is so far away at these rates. Yes, Hot Tamale, I agree with you. 70K does seem so far away, but yeah, right. At these rates that we're dropping, it could come quicker than we think. All right. Hey, the guy in a hat. What's up, the guy in a hat? I'm down 30% on my spot bags. Would you sell now or wait for a larger bounce? Man, that's tough, because even locally, we're expecting down to make new lows before seeing a bigger rise to the upside. But if you're down 30%, if you're comfortable, if it was me personally, and guys, I am not a financial advisor and I do not give financial advice. So this is not financial advice to you, but if I was holding spot bags that were down 30%, you know, I bought some Chainlink at $14 earlier in the year, and I bought some at $11 earlier in the year. Right now, I think I'm down on that, but I'm comfortable holding it, even holding it for 2 years if I have to, until it rises up again, because overall, I know at least the altcoins that I'm holding, I know are decent projects that are probably not going to die. So I am comfortable holding it for a couple years if I need to. It's a spot. It's a long-term play. Now, if you're going to sell it now and lose 30%, that means you're going to, if you buy it lower, you're going to have to pretty much make, you know, double. You're going to have to have a much larger rise to the upside to even make that 30% back. So it's up to you what you want to do with that. I personally would probably hold through it. If they're good altcoins, if they're like crap coins and like meme coins and stuff like that, you might have to just take the loss on those because they might not ever come back up. But I would say, you know, Bitcoin, if you had to take a guess, would you say that bounce occur and which price? So for me, like if I was, let's say I bought Bitcoin and I was dollar cost averaging on this rise to the upside because I thought Bitcoin had bottomed out and we were going to go to new all-time highs. So I was buying every week, dollar cost averaging, and now I'm underwater, you know, 30% or so. And maybe I did buy a little bit up here too. That's why it's under 30%. I would be actually not trying to sell it, but as we come down to these key levels, I would be adding. I would keep dollar cost averaging as we keep breaking key lows and coming into key supports. That would bring your overall spot price average down more, and that's probably what I would do. Man, guys, I just noticed this. Look at the 2-day time frame money flow now coming out on Market Cypher B and about to cross into the red on NAMI. When we close this in a day and a half, if we close red, this is going to cross into the red. This is going to be dumping aggressively on the 2-day time frame, but we could be setting up for some really nice bull divs where if we do come down and take out 80.5K, we might see at least a decent rally up to, the mid 90s, because we'd be making lower lows and some nice higher lows here. Nice higher lows here. So I do think we could get a significant relief rally from 80.5K, but overall, I'm expecting pretty much to come down to take out our 74K lows, or maybe even come down to 70K down there, where that very key support at 70K is. Jojo, good evening to you as well. Let's see, impulsive dump. Yep, still in it. Okay. 80Ks. Yes. We'll cover ETH. We'll cover Solana. We'll cover Tau. We'll go through some of the altcoins. Man, I need to be watching more of your videos. Perfect stream to learn. Wendell, welcome in, man. I don't know if I've seen you in here a lot, but thank you so much for that kind comment. And you're welcome here. You're welcome here, and thank you for being here. I hope you do learn from this. And guys, if you have learned anything today or got any sort of insight into the market, please hit the like button for me. Really quickly here, I know I have a lot. Good afternoon, Decrypto. Let me see. So basically we're effed. Yeah, Mind Tapestry. Unfortunately, man, unfortunately. Really quickly here, I want to cover the partners of the channel. I'm going to cover the order flow and the liquidation, and then we'll go into the altcoins, and we'll be quick about all this, guys. So don't worry, we'll have time to get through some stuff here. So the partners of the channel, the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is to sign up is an email and a password. No VPN required, no KYC required, just email and a password. If you do sign up using my affiliate link in the description, you can get a minimum of 20% discounts on trading fees, but you can actually earn 40% discounts on trading fees if you deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much volume you move in the futures markets. And they're offering some of the best initial deposit bonuses in the entire industry. Like if you deposit $100, they'll give you a 50% deposit bonus, which is the highest I've seen for a $100 deposit, is a 50% bonus. And then, of course, 20% and 10% deposit bonuses depending on these numbers here. I have also partnered with BYDFI to create a Telegram community where I especially on this move up to 98K, the short from 98K, the short from 90.5K, the long from 87.5, the long from 86.2. I've been letting you guys know pretty much on every pivot in the past couple of weeks about how I'm trading Bitcoin, and all of those trades have been successful winning trades. Now, not all of them have hit their final TPs before getting stopped out, but we have been pretty successful. Also on Solana, we've been pretty successful. So if you're interested in joining the Telegram, it is free. I post throughout the day my thoughts on the market. I do post some trade setups in there, or, I let you guys know when I'm taking a long or a short on Bitcoin or other coins. It's free to get in. All you need to do to get into the Telegram is sign up with BYDFI using my affiliate link in the description, and then deposit $100 into the exchange. That $100 is your money to trade with. You'll get the discounts on the trading fees. You can get the deposit bonus if you do KYC. And once you've signed up to the exchange and deposited the $100, there's a Telegram link in the description of this video. Click the Telegram link and type in /verify in your user ID, your BYDFI user ID, which will be right up here. It's probably going to be a string of letters and numbers for you guys. But once you've done that, /verify your user ID, you'll be in the Telegram. And once you're in the Telegram, once you're in, you are in. All right. So BYDFI is the main partner of the channel, and joining the Telegram is, I think it's a win-win for everyone. You guys get discounts on trading fees. You guys get access to my thoughts throughout the day. You can ask me questions in the general chat. You can tag me and ask me questions. And I get a percentage of your trading fees. That's the only thing I get that you were already going to give to the exchange anyways, whether it was BYDFI, Bybit, Binance, whatever exchange you were using. The second partner of the channel is NAMI Trading. And NAMI is this momentum and money flow indicator down below market cipher B. I use it for my entry and exit confirmations on my trades. And it is like, as we were coming up to this key resistance at 98K, bear divs on the chart confirmed. Bear divs, it prints out the bear divs for you. So if you're not good at reading them, it prints them out for you. We also had bear divs on the money flow. That's why I was expecting a possible major rejection between $96,500 and $98,500, where we could then come take out our 80.5K lows. But it's my confirmation for entering trades. So as we're coming up to key levels that I'm watching on the chart and that I have trades planned for, And it's been invaluable to me. It's been so valuable that I don't know I would be near as successful or profitable without it. So I have partnered with Nami Trading to get you guys 50% off. If you guys want to purchase Nami Trading, the lifetime subscription, you can click the affiliate link in the description and then type in Divine50 in the discount code box, and you guys will get that 50% off Nami Trading. Lastly, I have Bybit and MEXC, just two other exchanges that I'm partnered with. They are great exchanges, offering some discounts on trading fees. Bybit's offering up to $30,000 in futures trading bonuses, and MEXC is offering a 10% initial deposit bonus up to $1,000. All right, that's that, guys. Let's get back to the TA real quick. So I just want to talk briefly about the order flow and briefly about the liquidation heat map. Really, this dump from $90,600, you can see pretty strong dump to the downside. But what is important is if we look at our CVD, and specifically today, we have our CVD drastically decreasing. Now, what is CVD? Cumulative volume delta. It is just simply market shorters or market longers. It's the aggressive market participants. So if people are shorting the market, actively shorting the market, your CVD is dropping. If people are longing the market, it is rising, right? Now, it can happen in a couple of different ways depending on your open interest. But right now, if your open interest, now what is open interest? Open interest is just our new positions opening or closing. So if open interest is increasing, that means new positions are opening. If open interest is decreasing, that means positions are closing out. So when we see a dump to the downside, we want to come into our CVD and we want to come into our open interest, and we want to look at primarily the open interest. If your CVD is dropping and the open interest is raising, we know those are new short positions. We know it's new money that's entering the market that is successfully pushing the price down. So the fact that we have a whole lot, look at a very steady, heavy increase in open interest today and a very steady decrease. We have pretty much everyone shorting the market now. All the big players are shorting the market and successfully pushing the price down. Now, we are seeing some local longs come in the last hour. You can see here, CVD is increasing, open interest is increasing, so we're seeing some longs. I would personally want to wait for one more low. If we get one more low for the day, I'll be looking for a long off that. Because we have our couple 1-2s in here, and then we would get our kind of 4-5s in here, that descending channel that usually will give you a decent correction to the upside. But that is the open interest. We're seeing the big dump come in. And the other day, I warned you guys about how we were seeing bullish CVD divergences, but they weren't on an increase in open interest, and that was kind of bad to see. Gosh, we are even still, wow, look at this dump here. We were looking at the 3-day channel, this ascending channel that was 3 days long. And as we were rising in here, we saw the CVD kind of, especially since, what was that, Tuesday? We saw the CVD dropping and your open interest was flat here. And I said, guys, even though we're seeing CVD divergences because we're seeing higher price in the price action, lower in the CVD, which is a CVD divergence, our open interest was primarily flat and dropping. And that is not a good sign of absorption. So I said it was less likely to play out the way we wanted it to. And it's now already been completely invalidated. So that's it for that. I kind of warned you guys about that in yesterday's video. Lastly, let's go real quickly into the liquidation heat maps. Now, this is the Model 2 heat map for a year, looking at the last year of price action, pretty much looking at our entire 2025 range, right? From January of 2025 to January of 2026. And if we look at that liquidation heat map, where's the liquidity? We've already pretty much taken out all the liquidity locally to the downside. And I talked about on the Model 3 heat map how that 86.3, 86.2K lows was super important for the liquidity because we had a lot of liquidity that we probably weren't going to leave down there. So we took that out. We got a small bounce of a few $1,000s, and now we're dropping. But if we go to the year-long heat map and we look at the liquidity now, where is the majority of the liquidity sitting? Look at this, guys, right below our 74K lows. These are our 74K lows from April, $74,500, and the liquidity is resting down there. Because we're impulsing down, it is highly likely that eventually we will come grab that liquidity. Now, we probably see a strong bounce after that liquidity's done. But I just want to make you guys aware that this down here has major liquidity resting right below it, which is begging to be taken. All right. I'm just reading some of the chat. I'm going to get a drink of water, read some of the chat real quick here, and we'll get into the altcoins. I want the short squeeze to happen already. Yeah, I mean, the thing about new short positions coming in locally is that if we do start to push up, then you could squeeze out all those shorts because we still had shorts coming in as late as like $84,000, you know? So if we do start to bounce, but I would expect a local low, you know, that one more local low to come in, and then we could see that short squeeze, which could bring us up to the golden pocket between this high and this low. We could come all the way up to the golden pocket around, you know, $87,500. And that could be the squeeze that we're looking for. Okay, I checked the ETH chart. The local GP has confluence with the POC of the range right inside the golden pocket. Coinbase chart. Let's go to Ethereum real quickly here. So Ethereum, guys, I'm looking really, we're still at the bottom of our pitchfork. So we rejected the top of the pitchfork with that distribution range. We bounced from the upper band, held the upper band, held the upper band, held the upper band, lost it. Bearishly backtested. This was very important here because it was also the bearish backtest of our 4-year long range. If we look at ETH has been in a 4-year long range since March of 2021, or May of 2021. But you can see, let's see, it's not that range. It's not that range. It's our 4-year long range. That bearish backtest, after falling back inside your volume profile, it was not only the bearish backtest of the pitchfork band because you lost the pitchfork, but it was also the bearish backtest of the value area high. This was a very important rejection. We made new lows. We came down to the midline. Strong bounce from the midline. We got that contracting diagonal. We got the drop, and then we got another 1, 2, 3, 4, 5. Overall, making a lower high, which was very surprising for me. But we are back down at the base of the pitchfork, not the base, the midline of the pitchfork. We took some liquidity, that liquidity that was at 27.73. So we're grabbing liquidity into the base of the pitchfork. But if we start to close, just like with Bitcoin, just like with the total market cap, we're at support right now. But if we close daily candles below this pitchfork midline, I think eventually we could even see a drop all the way to our golden pocket. Now, I know what some of you guys are saying. Wait a second. The golden pocket was right here. If you pull a golden pocket from the $1,400 lows to the all-time high, and you turn on that golden pocket, we bounced from the golden pocket already, Divine Hood. What are you talking about? Yes, that is a golden pocket, but that is not the proper 61% retracement. Remember, 61.8% is ingrained in our psychology. It's ingrained in nature. So the actual 61.8% retracement is what we're looking for, the proper 61.8% retracement. Because this move, and we're on log scale to minimize the volatility, is over 100%. It's a 258% move to the downside. We need to take this Fibonacci retracement. We need to come into the settings and we need to click based off the log scale. Now, when you do that, it's going to, I'll just show you real quick. When you do that, it's going to shift your Fibonacci down to the proper area, right? And that is your proper 61.8% retracement. 2224 to 2137. And now I want to make sure that's right because all right, from that low to that high, there we go. Pull that over. And that is your proper retracement level for the golden pocket. So if we lose the pitchfork midline, which has been holding at support multiple times, support, maybe support, hopefully support, we could see a move, a decent bounce from this area. But unfortunately, just like with Bitcoin, just like with the altcoins, I do think that Solana could be in some trouble. Even up here, if we're looking in terms of Elliot waves, we have some 1-2s up here. 1, 2, 1, 2, 1, 2. You have your big third wave here. So now we need some 4 5s, 4 5s, 4 5s to come in. And I think we might, if Bitcoin really does dump to 70K, I think Ethereum is going to come down to around 2150. If we come down here, I will be looking for spot buys and swing long positions. I mean, this $2,100 area would be really, really key. Now, also, if we pull our different March of 2024 to current day, and we look at that volume profile. Let me turn off the 4-year long range volume profile. We'll look at just pretty much the year of price action from March of 2 years of price action from March of 2024 to current day. Where is the value area low? I mean, come on, guys. This is such macro support down here between 22 and 2100 or 2250 and 2150 that if we come down here, it is spot buys for me. So now you can also see the POC is where we bounced in November. On that drop in November, we bounced directly from the POC. But we were not able to come up to the value area high. If we lose the Pitchfork midline in the next couple of days, I think we could come down and SFP those lows from November just to get a small day trade long to back test this Pitchfork, which would give us a nice, 5-10% move. Let's just say that could be a nice, 5 to 10% move, 9% move to the upside, which would be a good long trade. But then I will be looking to short down to the golden pocket. So that is kind of what I'm looking at. Now, Ethereum hasn't lost it yet. We're holding it, and the daily candle is still wicking and holding at that level. So it's going to be important for Ethereum. But you can see, just like with Bitcoin, we had some liquidity that we grabbed, but we still have a liquidity trail in here that could be taken. And if we pull our golden pocket from the lows to the highs of this range, first of all, we already came down and tested the golden pocket with this low. So let's look at our 786. We already tested the 786 with this low. Now, because from this low to this high was already tested, golden pocket 786 area, we now have to look at our new Fibonacci retracement, and we could pull it from that low to that high and look at, well, first of all, we came down and took out that low. So already the Fibonacci retracement's out of the window there. You could even pull a Fibonacci retracement from the November lows up to the lower highs there. And yes, you are kind of at your 786, which is the SFP and the Pitchfork midline. So this is kind of important support that has to hold locally. But I don't know if it's going to. Let's just say that. If Bitcoin remains bearish, which it looks like it's going to, if the total market cap remains bearish, which looks like it's going to, then Ethereum is eventually going to lose this. So be careful. We did front run. Also, guys, the other day, what was that last Sunday? On Sunday, we front ran the liquidity grab. And oftentimes when you front run a key liquidity grab and you see a small bounce, the next time you'll fall right through it. It won't work as a liquidity grab. So that's kind of what I'm expecting here. Now, could we see a bounce from the liquidity grab of whatever that low is at 2620? Yes, we could. And actually, I'm going to set an alert there right now, because if we get the SFP there, I will long that. But I will long that looking to take profit around $2,800, $2,790. Okay. Let's turn on some of our levels below us. Let's look at some weeklies. Okay. Also, guys, we have a weekly within this box of support as well. Value area low, weekly, macro golden pocket, Pitchfork band. I mean, what more could you ask for there? We do have some daily levels, 2,500, 2,400. Ooh, and we do have a fresh naked daily point of control just below us. So for today, for very local price action, and we have some naked dailies in here as well. I mean, guys, between 2250 and 2150 is like the ultimate support for Ethereum, where I would really seriously be considering going in heavy. Now, on the naked daily points of controls, we have one below us at 2742 or 2743. We are so close to hitting that we probably are going to come down and hit that locally. And even if we're looking at our move down, very similar to Bitcoin, we could be looking at a 1-2, 1-2. This is your big third wave. we might see a couple 4-5s come in here to where we actually hit that naked daily point of control at 27.42. Man, and if that doesn't hold, you are going to come down to that point of control at 26.20-ish, pretty much 26.20. Yeah, I mean, okay, this is nice actually so far what we're seeing. So if we make one more low into that naked daily point of control, it could be nice because we have a 1, 2, 1, 2. Here's your big third wave. Then you have a 4, 5, 4. And then if we create one more low into 27.42, 27.43, we might be able to get that rise. And from here, guys, we would be expecting a 3-wave retracement, 0.5, golden pocket, 786. Those would be your key levels. And we could also look at volume levels within that. But what we want to see really is we want this to come down relatively quickly today, and we want to get back above this Pitchfork midline before the daily candle or the daily market close in 4 hours. So in the next 4 hours, we want to make one more new low and get back above 27.85. Let's see, let's see. CJ, welcome in, man. Imagine my short from 98K, $200 margin, 500x leverage. You took 81K profit. Damn, man, that's really awesome. Very risky with that amount of leverage, but good for you, man. I'm genuinely happy for you that you made such a large, what could be life-changing amount of money for you off that short. Yeah, time attack TPO. It's not a good low that we just made, so I'm waiting for another drop before looking for long. Same exact here, but I'm looking for it based off the Elliot wave structure, not the TPO chart. But either way, we have the same analysis. Okay. Once you are down 30% on a crypto, you are not a community member. Time attack, that's a little harsh. But you need to have a plan before you are here. You are already selling closer to where you would want to long. Yes, I agree with that. Okay, let's go into Solana really quickly here. Solana, guys, I'm really kind of bummed about what we're seeing with Solana. I was really hoping, and those of you that have been around for a while, we've been talking primarily about this range between the large point of control and the large value area low. Jawfeel's heard this. You guys have heard this many times. We were looking for pretty much like a tap 1, a tap 2, and potentially a tap 3 in here. A model 2 accumulation then where we could expand up to 170, 200. But we still could be in and by the way, we shorted 147 to 148 right here. We were looking for the SFP into the log golden pocket. This is a prime example, guys, of why it's important to pull the proper golden pockets. So if we look at a golden pocket from the last big daily high to the low, and we pull our golden pocket, you're going to say, wait, Divine Hood, we didn't hit the golden pocket. It was at 150 to 152, and we only made it up to 148. We didn't hit the golden pocket. Now, in a logarithmic chart, when you're seeing high volatility moves, you should be using the log scale. If it is more than a 30% drop to the downside, then you should change your fib settings to based off log scale. This was a 32% move. So we need to come onto this fib. We need to go into settings and we need to based off log scale. It's going to shift it to the proper 61.8% retracement level. Look at where we rejected, exactly at the golden pocket 618. If you have more than a 100% move to the upside, you need to, on that retracement for the golden pocket, you need to shift it to log scale. So remember that 30% to the downside, 100% to the upside. But we shorted 148. We were looking at this range. And we are dumping and we are losing the lows of the range. Now, earlier today, I was talking about potentially seeing the SFP of the low. I actually longed that SFP. I told you guys in the Telegram, I longed the SFP of the low from earlier today, but I believe I have now been stopped out. Yes, I have been stopped out in a loss on that. So I took a loss today, guys, on Solana. I was hoping that we would get the SFP of the double lows. So let me go to the 4-hour chart. We had the lows of the range. After coming up and taking out the highs of the range, we took out the highs of the range into our golden pocket. after we lost our $123 value area low, we were potentially expecting a drop to grab the liquidity of the range lows. And when on Sunday, when we had front run that low just barely, I was hoping that we could come down and grab it. Now, I should have paid attention to my own advice that I gave you guys earlier in the stream about 10 minutes ago, where I was talking about how when you front run on Ethereum, when you front run a liquidity grab just barely, the next time you come down, you're more likely to not see a successful liquidity grab. It's going to bust through. So on Solana, I didn't even listen to my own advice that I know or my own teachings that I know. We had front run it on Sunday just barely. We got a small move up to make a lower high. By the way, rejecting from the golden pocket, our local golden pocket. Non-logs, excuse, from this guy here, non-log golden pocket rejected. Maybe it was this one then. Yeah, it was about that $127 area, $127, which was a naked weekly POC and there was something else there too. Anyways, we rejected from it and we came down and we could still see a large daily time frame SFP of this low, but at least locally, I got stopped out on a trade earlier today. So now I would be potentially interested in longing if we can get back above it again. I would be interested in potentially longing the back test of it. But until we start to see some sort of strength come in, I'm not looking at longing Solana. Because Solana, let me zoom out now to the weekly time frame. Solana could be in a big distribution. So clearly, this move up was impulsive. We had a huge increase on the weekly time frame. Now, for the last 2 years, from March of 2024 to pretty much March of 2026, we're almost there. You can see here that we've been in, let me turn off some of these levels and clean up this chart. We have been in a larger range. Right? And so we've been primarily looking at two things here. Either left shoulder, head, right shoulder, model 2 distribution, Wyckoff distribution, whatever you want to say. This could be a weekly distribution where if we are going to go into a bear market, we're going to drop significantly, potentially all the way down to $31, potentially, if it's very bad. Now, $73 to $73, $73.50, I will be looking for longs around there. It's an important support resistance flip. It's also a naked monthly point of control. We also have that weekly order block in there that's really nice. But if it's distribution, we're about to lose this, and we could see significant droppage over the next weeks to come down to $74 or lower. But in the bullish scenario, we're really hoping, and I am because I'm a Solana bull, that this range that we're forming here is a little accumulation range, a daily accumulation range. So we want to see kind of like, and we still could see this range play out, by the way. We could be looking at readjusting this range. So now let me zoom in on the daily. There's two ways we could be looking at this range. So primarily, we're going to be paying attention to this price action. So we could be now saying, because this was all kind of one trend to the downside, one kind of move, we could say this was our tap 1, and we're in process of making a tap 2 now, and I would expect that to come in at 105. I'll show you guys that in a second. If we get to 105, I plan to scalp long to day trade long 105. And then we might come up from 105, we might come up to golden pocket, or we might even come up to kind of POC again, and then see something like this where we could shift our accumulation. Just it's tap 1 here, tap 2 here, tap 3 here. Or if we still want to go with our original accumulation idea, this was the tap 1, this was the tap 2, but now instead of seeing a model 2 accumulation where you make that higher low and make that inverse head and shoulders, we now say it's a model 1 because we've already taken out the low. So a model 1 accumulation, you have your first tap, your second tap always comes lower than your first tap, and then your third tap actually comes lower than your second tap. But it's a tap 1, tap 2, tap 3, and it's kind of like that descending channel structure. Or, you know, we did take out the high, so I wouldn't call it a descending channel structure, but it could still be a model 1 accumulation. Model 1 accumulation in here. But I'm shifting my bias now with the recent developments. It's probably because this was all kind of one downtrend. this was probably our tap 1, and we're probably in our tap 2, which I would expect it to come down to around 105. So below us, we do have some support levels. Coming up relatively quickly here, we have a daily level at 112, 112.75. Now, I'm not looking for too much there. We might get a small bounce at 112.75, but the big level I'm looking at below us, between 105 and 107. So you can see we have a daily at 105. We have a naked monthly point of control at 105. We have a naked weekly point of control at 105. We have a naked daily point of control at 105. And we have a weekly level at 105, 106, 105. I mean, there's so much support down here at $105 that it's ridiculous how much support we have down there. So this area here, $105, and let's see, let me go to the 2-hour chart. Yeah, daily order block. So that's why it goes up to 107, because we have an order block. But the daily order block, we have a weekly, we have a naked monthly point of control, naked weekly point of control, naked daily point of control. There is so much support between, I would say, 106 to 105 is really where you want to be looking. But if we do come down there, and this might take a few days, right, or maybe another week, I will be looking for longs from this area. And then those longs could bring us all the way up. This is theoretical right now, but we could pull it from the highs, and I'll just put it down to 105. It could bring us all the way up to backtest 131. And that would be, you have some internal liquidity in here that could kind of be ran, or maybe even coming up to your 786 Fibonacci. We'll see how that plays out, but we're not there yet. We're just looking, but for now, we really don't have much support below us. We have the daily at 112.75, but our big level of support is around 106, 105, where we could be looking for longs. Until then, because we are starting now to close daily candles, if we close the daily candle below this value area low again, this is our 2-year long range value area low, which is coming in right around $123. If we close the daily candle below $123, it's a bad sign, because we already saw the fake out on Sunday, had a lower high, and now we're making another lower low, continuing bearish market structure. And that's the scary part here, guys. Now, what about from the 148 high? We were looking at a potential wave 1, wave 2, wave 3, wave 4, wave 5. Okay, so we could see the 5-wave move done. This could be an A wave, B flat, which the B flat takes out the A wave lows, and then we would want to see a C wave to at least come take out your highs at 128. That is a possibility that we could be seeing a flat correction before continuing down to 105. We could also count this a different way. We could say this is a wave 1, a wave 2. All of this is your wave 3, because within your wave 3, you have to have a sub count of 5 waves. This was the wave 4, and this is the wave 5. Either way, depending on where this 5th wave ends, which it could end where it's at right now, we would be looking for a 3-wave corrective move up to the golden pocket. So we would be looking for a move up to, let me just put this on the proper area. What the heck? All right, hold on. I got to get rid of these things. We'd be looking for a move up to around 135, 136. And this would be your big wave 1, wave 2, maybe a wave 3, wave 4, wave 5, some sort of contracting diagonal in here. We'll see what happens, but we are SFPing. We're attempting to SFP the range lows, and we might be able to see move up. Now, do we have bull divs on the chart? Let's go to the 1-hour chart first. 1-hour chart. Yes, we do have bull divs, right? Between Sunday lows, and by the way, guys, weekend lows. I told you guys this all week long. Pay attention to those lows because they were weekend lows. So we have lower low, higher lows here, okay? Money flow is starting to bottom out on the 1-hour. Now, even locally on NAMI, you can see we have some bull divs as we're dropping in this drop here. So we have bull divs on NAMI and Market Cipher B, but I want to see if we have 4-hour bull divs. That's what's going to be interesting. And yes, we do. So lower lows, not confirmed yet on Market Cipher, but higher lows here. So potential bull divs, but your money flow is still bearish here. And remember, bearish money flow will always overpower a single drive of bull divs on Market Cipher B. Now on NAMI, do we have bull divs? Yes, we do, but they're very slight. You can see here, actually, they're pretty much equal lows. So no bull divs on NAMI, and your money flow is bearish. That to me is a bad sign. Even though we have bull divs, I don't, it's not enough confirmation. Let's go to the 2 hour. 2 hour, lower lows, higher lows, but your money flow is kind of aggressively leaving. Now, on NAMI, you do have local bull divs within this drop over the past day or so. Money flow is starting to bottom out. You do have some hope here, guys. It's up to you whether you want to take this trade. Let's just entertain it along from here right now. All right, so we're getting in late, obviously, because we're above the SFP level. But let's say we're going to long right now. You're going to put your stop below the local low from earlier today. I would be targeting the back test of the value area low as a TP1. That is a 3-to-1 risk to reward ratio. So that is a decent scalp trade to take. But if you're longing from here, make sure you're going to take some TP at your scalp resistance areas. And if we look at the golden pocket, yeah, golden pocket's right there as well. So definitely a TP area, guys. And actually, I might even look to short 123 if we come up there. Because let's pull that. There, coming up to golden pocket, value area low. Yeah, it is a decent scalp trade, guys. If you want to take that right now, you do have some low time frame bull divs. Let's see how the 15-minute looks. Ooh, yeah. And so here's the thing. I would be looking for one more low. If we SFP one more time today, just like with Bitcoin, just like with Ethereum, I'd be looking for one more low because it does look like you have a couple 1-2s in here. 1, 2, 1, 2, a big 3. Let me redo that. 1, 2, 1, 2, a big 3, 4, 5. Now we need one more 4 and one more 5. And then you could get at least a move up to 123. At least, but it might even come up to 135. So that's what I'd be looking at on Solana, guys. All right. Yes, please hit the like button, guys. If you got anything out of the stream, please hit the like button for me. Remember, you guys can sign up for the Telegram. All you have to do is sign up with BYDFI using my affiliate link in the description. Deposit $100 into the exchange. Once you've done that, you can click the Telegram link in the description. Type in /verify in your user ID into that Telegram, and it will get you in there. And once you're in, you're in. And you guys can shoot me messages in the general chat. You can look at my analysis throughout the day. So, yeah, there you go. All right, that's Solana. Let's I'm going to set an alert here, actually. I think that, so I would say now, by the way, guys, if you're coming up to 123 and rejecting, I'm looking for a short as a scalp because we've already dropped what, 10, 15%. We've already dropped a significant amount. So you really don't want to be shorting after a 23% drop. You don't want to be shorting. But what I'm looking at is if we do come up to this high time frame value area low and reject, then I think we are eventually going to work our way down to 105. So, but I would be waiting for the rejection. This is the way I would play this short. I would be waiting for the rejection. Come up here, reject maybe, and then I would probably short around 122. Stop would go right above that local high. And then I would be targeting the low at first. That's still a 4.5-to-1 risk reward ratio. I'd be targeting the low. Now, let's say we make another low real quick and then push up there. I would be targeting, I mean, you could, yeah, my overall target would be 105 down, down here somewhere. It is dangerous unless you absolutely know what you're doing with scalping. It is dangerous to short after a major dump. But knowing that the higher time frame value area low being broken is a very important level, and we have a golden pocket in there, man, oh man, it could be a good little short position. Okay, 99% of crypto went broke this cycle. Yeah, it did. I mean, crazy stuff. All right, Ada, Render, Crow. ENA, Arrow, Doge. We probably won't be able to get to all of those, the guy and a half, but I will look at some of those. USDT's breaking up. Yes. Okay. Thank you for talking about that. I want to check out USDT dominance real quickly. Wow. Let me get rid of this. So guys, we have been in what we kind of were considering a bull flag, right? You kind of were looking at this as a potential bull flag in the making where we could break it up to the upside. Now, by the way, look at these channels. Let me hide the bigger channel. And for the past month or so, 2 months, we've been looking at this channel. Where do we end? Down perfectly at the bottom of the channel. After rejecting the midline, we came down. And if you remember, I covered the last time I covered this was like 2 or 3 weeks ago, but we were rejecting right up here. And I said, watch for us to drop to the bottom of the channel. Now, after bouncing 1, 2, 3, 4 times, and within those, there's a couple local bounces from the bottom of the channel, we're starting to break out of the channel with volume to the upside. It is at least, at the very least now, it's highly likely we take out this high. And remember, you have another local high there. So in a fake out scenario of a bull flag, we're going to come up here, we're going to SFP the double highs, and then we're going to drop. Or what we could see is continuing up here to SFP those highs to drop to bullishly backtest the channel before seeing the bull flag break out. But either way, it does look like USDT dominance wants to break up here. And we might see a huge breakup in USDT dominance. Man, we could come, let's pull our volume profile of this upper range in here. Yeah, we could break out to 7.2%, 7.2. Let's look at our weekly time frame. And I want to look at the monthly real quick. Okay, no monthly levels in there. I mean, we have some pretty big gaps, fair value gaps within this upper range up here. I would say if we don't SFP these highs at 6.675, 6.76, we are going to come up to at least 7.2, at least, because we're already entering back with inside this volume profile here. It's going to, gosh, this could get really bad, guys. This could get really bad for the crypto market. But knowing that this could be a giant breakout, we could see new highs on the USDT dominance chart. Either way, the breakout that we're seeing today after last week, kind of seeing this little rejection from, first of all, we bounced from the bottom of the channel, came up to the top, saw a small pullback, and now we're breaking out of the channel. Oh no, it's not good. I think this is going to happen. This is speculation, but I think we're going to SFP the double highs to backtest that channel. And if it holds right here, that is when we could see some explosion to the upside. If it SFPs and we fall back inside, that's actually going to be a good sign that we could probably come down and take out the low again and even see a drop to backtest the value area high of our lower range. That's what you want to see if you're a bull for crypto and a bear for USDT market cap. Let's see. Let me, Big Deals Whale, welcome in, man. Okay. Normal Swede, welcome in. It's so good to see you in here. Guys, there's no way I'm going to be able to check all the comments now. It's just, it's getting a little bit too much to read every single comment. But let me check Bitcoin real quick. Then we'll go into some more altcoins. I want to zoom in locally here. All right. So I still think that one more low is coming for Bitcoin, but it is starting to look pretty decent now. If we do get another low. Bull divs, but money flow looks kind of bad. Bull divs here, money flow's coming up. It's actually very recently starting to come out, but I want to see one more low being made. You know, the 1, 2, 1, 2, big 3, 4, 5, 4, 5. And same with Ethereum, same with Solana. Solana looks more interesting to me because if we can get one more local drop to take out this low, and then we can get back above 116, 117, that would be a signal for a move up to 123. Sorry, 123. Okay, let's go really quickly. I'll do render. Let's see. Render on Coinbase. Man, there's got to be a better chart here. There we go. All right. Man, that it doesn't look too good. Let's pull our gold. First of all, I just want to look at the from the lows to the highs, and we're going to pull that log scale golden pocket because I think we're coming down to that. Yeah, it's already there. Okay. We're coming down to the log golden pocket. Now, on the October 10th dump, obviously we dropped past it. But you are coming down to your overall support level of that log golden pocket. You're still maintaining bearish market structure, though. You know, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. I mean, I wouldn't even count the wick, though. I would say lower, lower high, lower low, lower high, lower low, lower high. Are we going to come down again? So we're at kind of a macro support level here. And I would like to look at our sideways range. Yeah, POC, we're at the POC, but that value area low. So to come down and actually tap this value area low a little bit lower would be nice at 105. Let's say 105.6 or 106, let's say 106 $6. Now we're at the point of control support on the weekly time frame. And I would be looking at, so it does look to me like we had, 1, 2, 3, 4, 5 in here. Overall, this was probably a complex correction in here. And then we're looking, so from this high, this lower high right here is what's interesting to me. And I want to pull a channel from that high to that. Let's go to this guy right here. And then we'll pull it down there. So we're looking at this kind of channel. Yeah, midline's being respected pretty nicely. Moving down now, when we shift to the daily time frame, you can see your POC does shift a little bit lower because this POC and this POC, these volume nodes are very close. So on the weekly time frame, we're kind of at the POC, but this one looks a little bit stronger when you actually zoom in a little bit. So I would be looking, and that's at your midline. So at 147, 145 ish. Let's also pull our golden pocket locally on this guy from the last December lows to the highs. Yeah, okay. We're at interesting levels, actually, because depending on whether you look on this volume profile on the weekly, you can see this node right here, this high volume node. It is our golden pocket retracement with a potential POC there. Now, when we zoom in on the daily, this level, I have to say, is a little bit nicer because you have your 786, which altcoins often retrace to more than the golden pocket. They often retrace to the 786. You have your daily level, or you have your channel midline here as well, and the POC. This is a bit of a fair value gap. So if we lose the support we're at right now, look at this. This is a big fair value gap on the daily time frame. Let me turn that on. We're going to shoot right through that thing right here. So if we don't hold the support we're at right now at the top of the fair value gap, actually we're in it a little bit already, but if we don't hold where we're at right now, we're going to get sucked down through this to this support level. Let's look at our naked monthly points of controls. Yeah, that's pretty low. Dang, I guess, there's not much support as far as points of controls go. I was hoping there would be one in here, and there might be a daily. Okay, naked daily point of control, we have pretty much right where we're at. So it does look like we are kind of at a strong support level. Naked daily's just below, hasn't been hit yet, so I would expect probably to come down just a little bit lower to hit that naked daily. It's at 170.7 or 1707. We might get a small bounce from that because we are at the golden pocket. We are at a naked daily point of control, and we're at our large range point of control. Depending on if you shift it, the time frame, obviously, the daily level showing it down here more. And that's kind of just because the volume nodes are so close together. If we zoom in or pull over and look at this volume node and this volume node are so close together as far as volume goes. The amount of volume. Yeah, local support there. You are seeing some bull divs on the chart. Now, I don't know if you're looking to buy this spot. I personally wouldn't be buying this spot yet. Probably not until we got to the value area low at 111. In this golden pocket, taking out the lows from December into like 111-ish. 111 or 107, whatever that was. No, yeah, 105 to 107 is where I'd be looking. Nice support in here. For scalps, for long opportunities, day trade to long trade scalps, I mean, we do have some bull divs coming into this level right now. And let me just do this. Let's go to the 4 hour real quick. I don't really see good structure in here for a Pitchfork. Yeah, we would honestly, as far as Pitchforks go, we would have to pull your Pitchfork up here, and this is not going to be a very good Pitchfork because your high was so close to the high. Let's turn that on the original. Okay, let me hide the channel for a second. It does look, you see we're trading in this bearish Pitchfork here. And rejected the top of the Pitchfork. Of course, you got the big drop to the bottom on the October 10th crash. But we've been chopping around within the band, bounced from POC, lost POC. We came up to the top of the Pitchfork again. And that rejection right there at the top of the Pitchfork in January was pretty important. So we are coming down to backtest the band again. So we are, yeah. And both our local levels that I talked about just now, based off Fibonacci's, this level that we're at right here, right now, golden pocket, point of control, naked daily point of control, is a level where we might expect to bounce. But you can see the bottom of the Pitchfork band, and this is also pretty much near the top of the Pitchfork band. The bottom of the Pitchfork band, the 786, down here, filling your fair value gap. Both levels are looking pretty decent for support levels. So we might bounce from this area, but I would expect not much of a bounce. I would be playing it as, and actually I would still want to come down to hit that naked daily, but from that naked daily at 170, you might see a move up to wherever your golden pocket is. If you pull your golden pocket from the highs to wherever that low is, you might be able to move up to like 190. It's still a good trade. Still a really good trade. Do something like this and then kind of reject, lose it, work your way down to the bottom of the band. All right, what's your sentiment on BTC, retest value area lows, and 382 on small move before dumping more? On Bitcoin, so very locally, I'm looking for another low for the day. But I think Bitcoin overall, if you go back and watch the beginning of the stream, I think Bitcoin is coming down to take out 80.5K and potentially drop as low as 70K. Now, we play level to level as traders, so I'm not saying we're going to go straight to 70K. We will get bounces along the way. I longed this bounce here. I longed this bounce here. And I will long 80.5K. We're really, We're losing our 786 though, guys. If you pull it from the 80.5K lows to the 98K highs, unless we can close the daily candle above our 786, we're in trouble. And also, we're looking at this being that impulse. So if this is a wave 1, this was a flat correction in a wave 2, your wave 3, you want to continue down impulsively, very strong. So I'm not really looking to long the middle of a wave 3, a potential wave 3. I'm not there, you know. And if this is going to be, let's just say, I'm trying to think of another count we could do here where we're looking at, there is a problem with counting this as a 1, 2, 3, 4, 5, because this fifth wave was only a 3-wave move. But very, very low time frame. There is one possible count that is very shitty and very low probability, but let's say that was the 5-wave move. This was our now A wave, B flat, and then you could see a C coming up here. Very low probability in my opinion. And let's see if we even, because we've continued dropping a little bit throughout the stream. Let's go to between the 1.23. We've already hit the 1.618. So very low probability. Very low probability. In an expanded flat correction, if this is an A wave and this is a B flat, we've come down to the 1.618. That is your max target in an expanded flat. If you get another low, then we're probably not going to see a rise to come up to take out your $90,600 highs. But there is, it's not been invalidated because we are bouncing from that 1.618. And actually, I don't think we've actually touched it yet. So to make one more new local low, see how we barely front, oh, we did touch it. Okay. Actually, that's a perfect little bounce from there, but I only expect a little bounce. Let's just say that. Five all day. Welcome in, man. Good to see you in here. Okay, let's see. I did render. We did ADA the other day. I'm really looking for ADA to come down to 31.73. It's getting close on ADA. I think, you know, because remember, we're looking at, we already bounced from this support box. We're coming down. This is some old TA in here. I don't cover ADA much, so I definitely have to update the charts on this. But we already bounced from the 786 in the monthly, and we got to move up to the golden pocket to make a lower high. We were looking for this short at 43 cents too. But on ADA overall, if you guys remember, I showed you guys this. We had our 1-2s in here. 1, 2, 1, 2. So 1, 2, 1, 2. All of this is a third wave to third wave to the POC. Then we got that correct, not to this low. Third wave, you got your corrective move in a 4. This was a 5. This was another 4. This is going to be another 5. So coming down, because we had 2 1-2s up here, you have your third wave here, and now we're doing our 4 5s in here in kind of this wedge. If you come down and take out your liquidity, your internal liquidity around 31.73, it could be a nice little long position. Only if you SFP that, because you could come down and sweep it all together. But I would be looking at coming down to take out that 31.73 area. And you can see I have an alert set there because I am looking to potentially enter a long from there. Because we're looking at that impulsive move down. Double 1-2 on the daily, third wave. Now we're in our 4 5s. So essentially, I'm looking for more of a drop here. Let's get rid of this monthly. Let's get rid of this 786. And we can look at the much larger from the bear market lows to the highs of the bull market, or the cycle highs, I should say. And we're going to look at our 786, and we're going to make sure that's on log scale. Okay, that was the 786 from that. So yeah, we're really losing some key levels. Like we're at the level right now. We're seeing an SFP of January's lows, a potential SFP of January's lows. So actually, we could be done with our 5th wave today, our second 5th wave, right? We had our 2 1-2s in here. This was your first 4. This was your first 5. This was your second 4. This was our second 5. And we are SFPing the lows. Man, it might be done from here. I am personally not comfortable longing this yet with knowing Bitcoin, but also on the daily time frame, lower lows now, higher lows here, money flow coming to the upside overall. Nice bull divs here. Gosh, this actually looks good for a potential swing long, or I would say scalp day trade long coming up. So let's zoom in here. This is actually intriguing to me now. I think I really am going to try to long 31.73 if we get the confirmed swing failure pattern. But within this, yeah, we're SFPing the low. So technically we could have completed our second 5 today. 1, 2, hold on, let's get rid of this. 1, 2, 3, maybe a flat and a 4 kind of thing, and then a 5. But I would still expect this 5 to be a little bit longer. And also counting this 1, 2, 3, 4. Man, you have a truncated 5th here, or you would have to pull it all the way to here for your 5th, which does make sense because then you have that 3-wave move. 1, 2, 3. All of this is a 4, 5. You know, there's a couple ways to count this, but I would be looking. I mean, we are SFPing the January lows. That's pretty important, or December lows, the Christmas lows. Pretty important right now. This could be the end of it. I would probably prefer a little bit lower. Sorry, I know this is. All right, and let me check the daily here, and I want to just pull it back. All right, we do have a daily level right in here. Did we tap that daily? Not yet. Yeah, even coming a little bit lower to hit the daily at 32.59. Like if we can come down a little bit lower, hit that daily. I mean, I think the 31.73 is better because there's liquidity there, but the daily could give us the bounce too. Just know that we could be looking eventually coming up soon for a nice move up, because after an impulse finishes, especially a double 1-2 impulse, if all of this is a double 1-2 impulse and it finishes, you're looking for a corrective move. And that corrective move could come as high as the golden pocket. So let's speculate that it is done right now. We could pull it from the highs of the impulse to the lows of the impulse, which were made today. We could turn on our golden pocket. We could put that on log scale. Because it's more than a 30% drop, you might be able to move all the way up to 68 cents, which actually is a really good level. You have a weekly there. You have a daily there. Man, you know, that would be pretty cool. We are at the value area low of this kind of upper price action in here as well. Value area low into the daily. Yeah, I would say that ADA actually looks pretty good on higher time frames for a bigger move up soon. Now, as far as the overall, we could be looking at a wave 1, corrective move, in a wave 2. If this is a wave 3, we're only looking to move up to the 382 to the 0.5, which you can see I already had it on the chart. So let's readjust this to today's lows. So maybe not up to the golden pocket, but maybe only up to 48 cents to 54 cents. Because in the very, very bearish scenario is this is all 1, 2, 3, 4, and then we're going to come down and take out these lows in a 5. either way, soon we could be looking for long within this 32 to 31 cent area to maybe bring up to 48 cents. That would be a really nice swing trade, in my opinion. Money flow looks garbage. I don't like that one bit. On Market Cypher, let's see, does Nami? So I do like on Nami because we do have some nice bull divs on the weekly. And money flow is starting to curve up. Now remember, Nami is quicker at confirming these things than Market Cypher B. What I personally would want to see is, you know, maybe another week down here, get that liquidity grab, see this thing starting to bottom out here, and this thing starting to come up. And then, you know, this would be nice to kind of confirm this rollover too. But soon, ADA is going to potentially give us a really nice swing trade to the upside, potentially. All right. Yeah. AXS. I'll check AXS real quick here. Axie Infinity. Wow. Okay. So it's getting a really nice move up on the weekly. Remember, guys, Axie Infinity is a dead game. Okay. I don't know. Maybe they have some new stuff they came out with, and that's why it's been spiking the last weeks, few, like what, month or so. I would say overall, be very careful with this thing. Be very careful with Axie Infinity. I'm just going to get rid of some of this and we'll redo. We're coming up into like a confluence of resistance though. Yeah, so we tapped that weekly up in there. We got a pretty good drop from the weekly. Actually, we took the liquidity. So of this kind of triangle that we were seeing in here, we took the liquidity of one of those pivot highs there. This is a big fair value gap that could get destroyed. You do not want to start falling back down. All right, we're going to look at just this price action in here because you kind of bottomed out and formed a range, sideways range in here. And instead of seeing accumulation, you lost it to the downside, which is what we might be about to see on Solana. But within this range, so we'll pull that volume profile of this sideways range. Okay, that value area low at 508 is going to be important. I'll make, let's see here. And then we can go look at the pitchfork. So we're going to pull a bearish pitchfork from that last high, low, lower high, and we're going to look. Yeah, you're trying to break out of your bearish pitchfork, but I want to look at a modified. Interesting. Yeah. So we were chopping around within the pitchfork. You can see in here, bounced from the midline, rejected the upper band, came down to the midline, lost the midline, back tested it, lower band. You lost the pitchfork for quite a while, and it was kind of acting as resistance. But now we're trying to get back inside it. We came up to the upper band. If we lose this pitchfork again, that's not good. Okay, because we're rejecting the lower band. Now, once we try to re-enter back within it, you want to hold it. So if we're not going to hold this right now, it's pretty dangerous. You do have some support coming up, a daily support level just below the lows today. And then actually, let's mark out that this daily is probably a little bit more important. And we'll look at our naked weekly points of control within this. Man, like, once again, that weekly fair value gap in there, if you start to lose it, man, you are going to come down quite a bit. All right, I want to mark out You see how this naked daily point of control is right near, and I'm going to zoom in on this so we can get a better click on those. I like that naked daily point of control right here. And I like the naked daily point of control above it as well. But what we're looking at here is if this thing is going to maintain bullish market structure. All right, this area is actually kind of nice because you do have a daily level in here. You have your naked daily point of control, and you have that internal liquidity grab. So if I zoom back into the 4 hour, that liquidity right there before this giant pump is going to be kind of important. So I would say that is a pretty strong level in there. Let's look at the golden pocket retrace. Ooh, couple interesting levels in this guy. So golden pocket will also throw on that 786. Very nice. Okay, so two pretty good levels below us. We have our golden pocket and our naked daily point of control in here, and that's probably going to be towards the end of that weekly fair value gap. It's actually kind of in the middle of that weekly fair value gap. Okay, now this level is nicer because on that weekly fair value gap, you can see your log 786, your daily and your naked daily point of control are all down here. And then if we look at that fair value gap, it pretty much would be filling that fair value gap most of the way. And then as far as our bearish market structure, we made a low. We broke market structure bearishly, right? Broke some market structure bearishly on lower time frames. And then we came up for a lower high. So now we could be expecting a lower low. And the only thing I would be looking at, let's look at it. If this is an ABC correction, then we can go from the highs to the lows to the lower high. And let's turn on that ABC target zone. Yeah, I guess I don't really like the confluence within that. Let's pull our channel and look at the bearish trend that we're seeing. Okay. So yeah, I would say if we do kind of grind down and lose this midline, you might see a small bounce from the daily and the midline here, only to come up and then come back down. That 1.236 is going to be around the bottom of the channel in your daily. That's your kind of, 158 could be your first kind of local support level. If this is going to be a bigger A, B, C correction, and then you're going to continue up. And then very, very locally, as far as today goes, like more local price action, you're at your golden pocket pretty much. We're going to put that non-log scale golden. No, you're past it. We would have to go to your 786. You're tapping the 786 right now, but it's a front run of the daily. I mean, if anything, I think you're going to get a small bounce here. And maybe test the top of the channel, like 240, 242. Yeah, I would like to come a little bit lower, hit the POC in the daily. So watch for a little rejection. Now, I know this chart is starting to look messy here, but just hang with me here. This is the pitchfork, right? This is the back test of the pitchfork. We're starting to try to lose it now. So if we, on bouncing off this 786 in the channel midline, if we come up and reject from this pitchfork, I would expect to move down to the midline again, which would also be where your daily and your POC is. Maybe by then we have some nice 4-hour bull divs on the chart. Actually, we already do have some 4-hour bull divs on the chart, 4-hour bull divs on the chart. But I would like to drop a little bit lower to hit that daily and that point of control. Crypto Wandered, thank you for the comment, man. Got to go early today. Yes, guys, oh my gosh, it's already 2. I've got to go soon too. I'm sorry. I know that there's a lot more we wanted to get to. I will be streaming tomorrow, 2 p.m. Eastern Standard Time. So please come join me tomorrow. Real quick, I do want to check, guys, on gold. I sent Jason this the other day. We're rejecting from the top of the Pitchfork band. I mean, like gold, man. And I talked about how we could see a move to 51.90, and if we break that up to 55, you know, and we got that move pretty much. But gold has been a beast. And look at the Pitchfork. It's been so nicely respecting it. Resistance on the lower band, flip the lower band to support, work your way up, break the midline, flip the midline to support, and now we're working up into this upper band. But we are seeing a pretty harsh rejection. And then look at what happened yesterday. We came up to the upper band. We rejected the top of the band. We came down to the bottom of the band and bounced. So now I'm potentially looking for a bit of a range to form on gold within this band in here. You know, something like this to form. Like maybe we could see a bit of a range form in here. So we could pull, because we did lose low time frame market structure. Now gold is just such a beast because the world is concerned about the economies, and they're shooting into gold. Coming up to your lower high golden pocket right now, but I would actually like the 786 a little bit better. Oops. Because it's right at the back test of that Pitchfork band. So 54.88-ish. We could see now a move up before seeing a move down here on gold. Now, if gold starts to close daily candles above 54.70, let's say, man, gold could move up over the next months, weeks to $6,600. I longed gold. It was 3 days ago, and my TP was at 5,500. It was a scalp long that just kept going, so I just let it run. But I did TP the full thing at 5,500. Silver is coming up, and I showed this to Jason a couple days ago. I talked to him about it in his live stream, and I sent him a DM about this a couple days ago. But we are coming up to the Pitchfork band, the major Pitchfork band of resistance. Now, on silver, it's our 2-to-1 Fibonacci target as at 117, and you can see we got a pretty harsh rejection from 117. But I said to Jason, watch out, because we're rejecting 117, but we front ran actually touching the Pitchfork band by just a bit. So we might make another local high before ultimately dropping down to the $90 level. And then, you know, if it's going to continue. But silver is at kind of a macro resistance. Now, just like gold, it could reject at the lower part of the band for a day or two and then work your way to the upper part. So around 130 to 132, be aware that silver could see a rejection around 132 as well. But silver's been playing out so nicely. Like, this is getting super parabolic, though. Just be careful with that. Our 2-to-1 Fibonacci extinction here, looking at this pullback as a potential wave 4 and then a wave 5. Excuse me, a wave 2. So wave 1, wave 2, all of this is clearly a wave 3, which came up to the 2-to-1 Fibonacci extinction. If we pull back in a wave 4, and we would have to readjust this now to the new highs. Oop. $81 to $69. 81 was your 1.618, and that could act as support now as well. But I think this wave 3 is close to being done, guys. This is so parabolic now. The wave 3 is close to being done. And by the way, on much higher time frames, this move up from $11 to where we're at now could be the end of a bigger impulse to the upside as well. I think silver's going to maintain strong and gold's going to maintain strong just with what's going on in the world. And if we pull back to, especially if we pull back to 69, I'll probably buy some. S&P based on the Pitchfork. I do have a Pitchfork on the S&P, and it is if we look at the S&P's been holding, respecting this pitchfork very, very nicely. And we're up in this upper range up here. But we're actually working on flipping. We're at the value area high of the range, so be careful. And we did see an SFP up here. But the S&P is working on trying to reclaim this pitchfork band and flip it to the support. We're trying to flip it to support. We could continue on the S&P all the way up to 7,500. Now, that will take some time, and you will see, you know, moves along the way. If we do something, you know, like that. I think if the real bull market's going to continue, the S&P could grind slowly up, you know, for maybe a couple years until we get to the top. But once we get up here, I'm really expecting a decent retracement. Yeah, but look at, even today, we're working on flipping that band to support. So we could continue up. I'd just be looking at this sideways range as well. Careful, because now that we're falling back inside the volume profile, you could reject here and then continue down. And if we do continue down to the value area low, about $6,800, it's going to be your value area low in the bottom of the pitchfork band. That could be a really nice support level. It's also probably going to be around your 0.5. Yeah. I mean, that's looking nice. Guys, in traditional markets, the 0.5 is actually a lot more common than in crypto. So I would say this is becoming a real nice support now for the S&P. The thing is we have locally broken market structure bearishly. Yeah, we're coming up to golden pocket value area high right now. So be very aware, because you did break market structure on like lower time frames. Let's just go to the 2 hour here. You broke market structure bearishly by taking out this low from Wednesday. So now you could make a lower high. And if you're going to do it, this is kind of the area to do it where we're at right now. Another thing is we could be looking at this as a wave 1, wave 2, wave 3. Now, actually, wave 4 has already been invalidated because we hit the golden pocket from your wave 3 highs to your wave 3 lows. Yeah, never mind on that. Okay, that actually is bullish. That means that this is more likely to be a 3-wave corrective move, and we are going to continue up to take out the highs. The question is are we going to reject here first real quick, kind of see maybe a double bottom or a higher low come in before we come up to take out those highs? Okay, did you find potential reversal? I see a reversal or support at 80K. Yeah, for Bitcoin, guys, 78 to 77K is looking pretty good. Now, of course, 80K SFP is always something we need to be watching because it's a major liquidity grab. But if we look at some of our levels, okay, we're hitting into support of the 786. This is actually an old support level. That shouldn't be there. That was our rejection the other day at $89,500. I can get rid of that. Here we go. 78,300 to 77,300. A weekly level, a naked weekly point of control, and a naked daily point of control. So this box down here, if we're going to make a new low and not SFP 80K, then we're probably going to drop to here and see some sort of bounce here. And really, the naked weekly and the naked daily point of control is a little bit stronger than the weekly level itself. But within that general zone is where I would be kind of looking. Okay. All right, guys. I unfortunately do have to get going, but please come join me tomorrow. I know that we didn't get to cover near as much stuff as we wanted to today. It's important to cover Bitcoin. Let's see, ZEC. I can look ZEC really quickly. I know that it's just going to be like a minute or 2 minutes. Please hit the like button on your way, guys, on your way out. ZEC bounced from the Pitchfork midline. We came up to the upper band. We rejected the upper band, came down to the midline, bounced but created a lower high, and now we're losing the midline. So we might be grinding down to the lower band down here. You have a daily level that's coming up around, what is that? $313. But I would actually like to take out that low because what we're looking at with ZEC, obviously this is impulsive price action in here. Very impulsive price action. So now we're looking at a B, C correction and then maybe continuation, like in a bullish scenario. Another thing you could do is you could pull the channel and you can look at the bearish trend. So this is your bearish channel that you're in. Coming down to the 3.8, like this is the most kind of macro support down here. It's your 382, macro 382 Fibonacci. You can obviously see there's a daily level down here, right on top of the 382. It's in your zone between the 1-to-1 and the 1.236. It is also the bottom of the bearish pitchfork, or the bullish pitchfork, excuse me. And it would be the bottom of the channel. So that would be really, really awesome. I don't know if it's going to flush down that aggressive down there, but that area. But then remember, we also checked, last Tuesday, 235 is pretty important. 235, really it's 236. Naked monthly point of control and a weekly level exactly on top of each other. And then of course you can see the daily is just above that. This little daily is just above that at 239. So 239 to 236 is also a good support level. Money flow on the daily starting to curve out here. No bull divs really yet. Actually, you do on NAMI. You have some really nice bull divs on NAMI. Lower low, lower low, lower low. Higher low, higher low. And if we can get one more higher low here, ooh, that would be actually really nice because money flow is curving here. So if we can come down to this daily in this channel midline, that could be a decent long position there. Yeah, the unfortunate thing though, you hit your 786 and you created a lower high overall. And if we dump, and we're starting to dump here. So what's key is this low the other day, you want this to kind of be your overall low if you want to see these bull divs play out right now. I would suggest we're going to keep grinding down a little bit more. And it's actually more likely that we are going to make new lows below this low at 302 or whatever that was. A, B, C, even if it's a flat, just to come take that out before continuing higher. Another thing you can look at, and this is getting really messy in here, but you can pull that volume of this channel. The corrective channel, you can pull the volume. That's why we bounced where we did. It was the value area low. There was some internal liquidity in there. But once again, the key resistance now was that POC in confluence with the midline because we lost the midline that held. The midline held here. The midline held here. We're losing it now. And we front ran the bearish back test, but because we're kind of rejecting there, it's not the best thing to see. And I would expect us probably to come down to this daily. But okay, guys, thank you so much. Tomorrow, unless Bitcoin is really trading good, we're going to focus a lot on the altcoins. I'm going to cover them quicker tomorrow. We'll do like 5 minutes per coin tomorrow. We'll try to get through as many altcoins as we can tomorrow. Please hit the like button on your way out. I'm sorry. Time Attack. We are going to do Chainlink for you. Time Attack, are you still here? I hope you're still here. Chainlink. Chainlink is coming down to the bottom of our channel. So remember, we've been looking. Yeah. Oh, Chainlink. Time Attack. Hopefully you're not leaving. Let me see if you're leaving here. Yes. Okay, cool. Time attack. All right. Sorry about that, man. So we were looking at this channel in here just for the past few days, and we are coming down to the bottom of the channel. We're hitting the bottom of the channel again. We're also coming into that zone between the 1-to-1 and the 1.236. We're finally hitting in that zone, but I would probably be looking for the continuation of a grind down a little bit more. Overall, I do think we're going to come down to around $10. Let's go to the 4-hour time frame. Yeah, because very similar to Solana, we were looking at that POC to value area low, right? We're at and this is over 2-year long range. This goes back to November of 2023. This volume profile here. November of 2023. But we're losing the value area low again after a fake out last weekend. Because a weekend fake out, okay, acceptable. But now you're starting to lose it during the week with increased volume to the downside. The fact of the matter is we could keep grinding within this little channel until we come down to the 236 and actually hit the 236 at 10.61. 10.61 might be a good level. It's going to be aligning with the bottom of the channel. Money flow doesn't look too good here at all on the 4-hour, but you are starting to develop some bull divs. Starting to. Why is this like this? And you can see on NAMI, you're starting to develop some bull divs. Man, there's just not too much, though. Now that we're losing this kind of range in here, and let me just hide the channel for a second. Oop. What we want to look at is this price action, this range that was developing here. We're losing it. You know, we're losing the volume profile for it. It's not a good sign that we're losing the volume profile for that range. We've already closed. Actually, today would be the first daily candle close below that value area low and below our macro value area low of this range that goes back to November of 2023. So if we're going to start closing daily candles in the weekly candle below 11.68 to like 11.8, very bad sign. Ooh, man, this is, yeah. And so if we're looking at this as a potential A, B, C, we want to end that at 10.6. Now, unfortunately, I don't think it's going to. Money flow looks pretty bearish here. No bull divs on NAMI, but you are developing some pretty nice bull divs on NAMI, but you want this to bottom out. And it doesn't look like it's going to with today's daily candle. So we want this to bottom out soon, and we would see those local 1 low, 2 low, 3 lows. Did we hit into anything today? So let's see. All right. Actually, we are taking some liquidity from a very nice low today. We could get a decent bounce from this. This liquidity grab at 10.93 could bring us to backtest the value area lows between 11.6 and 11.8 at the very least. Oh gosh, we're not really seeing the signal we want to see even for a back test up here. Because look at no money flow looks pretty crappy. No bull divs here. Actually, yeah, you do. You have slight bull divs here. Higher low, lower low. NAMI has very slight bull divs as well between those two lows. And you got the confirmed swing failure pattern. Oof, man. That's a tough one. I would say, yeah, that zone is definitely going to be a local resistance now between the 786 and between 11.88 and 11.68 or 78. 11.88 to 11.78 is going to be kind of a local resistance now. So just be aware of that. And if you do reject there, I would expect us to continue down. But you are seeing the swing failure pattern. 1 hour, 2 hour bull divs, very slight. 1 hour bull divs, very slight. And local on NAMI throughout the day today, developing some nice bull divs in here. Money flow curving up. I want to check our 8 hour. Our 8 hour use. Man, see, this is what concerns you. That money flow coming out. No bull divs on the 8 hour. Money flow curving out aggressively here. So even if we get a bounce from here, I would expect no more than that. No more. And honestly, it's probably not even going to get up there. So just be very aware of that. When we zoom out to the higher time frames, your local golden pocket retrace is in alignment with that large range value area low. 11.69, 11.7. So I would really be watching for that rejection or the 786 and the smaller range value area low. It's this guy here, and it's this guy here are two local resistances. Overall, guys, I do think we probably are going to come down to hit your macro golden pocket. So if you remember, this is like the ultimate buy position. We had our lows here that were front run in April. April, we barely front ran those lows. So we created a double bottom there, twice the liquidity, and we front run our macro logarithmic golden pocket. Right? And that macro logarithmic golden pocket was pulled from the bear market lows to the cycle highs. That is your golden pocket. Right there. 9.92 to 9.35. But the 9.92, seeing the SFP of these two lows into that 618, I'll start dollar cost averaging. And then as far as, let me just hide some of this stuff in here. As far as our impulse to the downside, very similar to ADA. 1, 2, 1, 2. You have your big third wave here. 4. We didn't make a new low there. So all of this actually now we could say is a corrective sideways range in a 4. We're seeing our first 5 right now. If we get a retrace, we could see another 4 and then another 5. But it's setting up nicely to give us the end of the impulse around that 10 to $935 area, which would be, gosh, man, that could be one of the good swing longs as well. So just be aware of that. As far as this impulsive structure to the downside, it looks like we could see another. We're seeing our first 5 because we did not take out the lows here. Unlike ADA. 4 is a sideways flat correction. 5, 4, 5. And this, with this SFP that we're seeing today, I would say the max target we could reach from that would be pulling the golden pocket from your last big daily high to our current low. 13.14. Let's zoom in on this. So 13.14, and then let's look. I bet you that actually would sweep the liquidity from our little channel. Remember, this is our little channel that we're in. So if you start to break out of that, you expect to sweep it all up, sweeping it up right into that golden pocket. And then let's see if there is any naked dailies in there. No, you have some naked dailies up here. Those 2 naked dailies and a daily at 14. So that's still a good resistance up here. Now, if you guys are day trading Chainlink, you did get the SFP and you do have low time frame bull divs. So even a move up to that first 11.69 is an acceptable potential trade to take. I personally am not looking at that. I'm not going to take this trade. I'm just going to tell you that right now. But if you're looking for, you got the SFP, you would have to enter now. Stop would go below the low and you would be targeting that 11.7. Yeah, the risk to reward's just not good enough right now. That's pretty much what I got, but I would be looking, ultimately be looking down here. If we get that, man, that's going to be so nice. But remember, this is our first fifth wave to the downside. 1, 2, maybe all of this is your 3, your 4, and 5. Let's see, within your third, if this is the 1, 2, and this is your 3, you could say 1, 2. We have overlap here, so you can't. Man, you could still be in the third wave, actually. This could be a wave 1, wave 2. All of this has to be a wave 3 because you have your overlap. So 1, 2, 1, 2. Here's your 3, 4, 5, and then you need another 4, 5, and that would only cover the third wave. Then you would be expecting a 4 and then a 5 within the overall bigger first fifth wave. Then you would need another 4 and then another 5. So it could take some time still to get down to $10, but we'll keep an eye on this time attack. We'll keep an eye on this for you, okay? And just know that in that $9.92 area to about $9.35, I'm really gonna start dollar cost averaging into this thing. Guys, I really got to get going now. Thank you so much for being here. Please come join me tomorrow. Please hit the like button on your way out.